Good morning, traders and investors, and happy Friday. It's June 10th. It's Friday, and it's about 7:27 in the morning. I've been doing these videos earlier and earlier every day so that you can get a good outlook on the market before the market opens. We're going to open up in about 2 hours and 2.5 minutes to be exact with you. Now, today we've got something big. Notice the market's down just 66 points. The Nasdaq is up 22 points. I'm seeing a couple of things that are very contradictory. So we'll have more information after we get this report. But today we have a huge report, CPI. This will tell us if inflation has potentially, possibly, maybe. Notice I'm using very loose language here, very uncertain language. This may tell us whether inflation has peaked. I would love to see this number go down to 8.1, 8%. If it's at 8.4%, it's going to put another heavy cloud on the market, a real nasty heavy cloud on the market. Now, yesterday, things were going pretty good up till about the last couple hours of the day, and then we started seeing a rally, and that caused volatility, as you could see here. Just as I was getting happy, just as we were going lower, it just started up again. Now, this is not good, and here's the other nasty part of this. If you look at the Dow, we were, and I really need to show you this. This is really important stuff here. And by the way, folks, if you're liking these videos, if you're enjoying these, send me a love letter. It doesn't cost you anything. Support at marketgeeks.com or post comments in the chat. I want to know if I'm helping you guys out. Anyway, I don't like this. See how we broke down? I thought we were going to break higher. So either this is just a shakeout, but the good news is if it is a shakeout, we're going to find out about it within the next couple hours, because if it's a shakeout, the market's we're going to see volatility today. So either this is going to regain composure and make the world good again. Obviously, I'm being very facetious right now, or it'll continue breaking down and again go towards the bottom. So things were not looking this way. Things were not looking this way, and let me show you why. So I'm a little perplexed, because one part of the analysis is telling me that we're going to go up, but obviously I can't fight the tape, and I'll never fight price levels. And this is clearly breaking a multi-day low the day before the CPI. So this is very important. But here's the interesting part. If you look at the bond market didn't move yesterday. I mean, look at this. And notice how listless it has become. That's because usually this happens in anticipation of the CPI, especially when the CPI has so much writing on it. But we're having very little volatility, and the bond market did not break lower. Again, the bond market did not break lower. I would have anticipated that the stock market got this move yesterday from the bond market, but it didn't. So it looks to me, and again, it looks like this was fairly broad, but it looks like we had a selling yesterday, some selling pressure ahead of the CPI. So will that continue or not today? We're going to know, and we're going to know before the opening bell, because we have this report coming out. So if it's on the high end, the odds are we're going to go down. If it's on the lower end, we may come out of this. So today is going to be a very important day, and today we're probably going to figure out if we're going to go back to the lows or if we're going to come back up here and stay here. Now, here's the other interesting part. So bond market didn't really have a move yesterday, right? Check this out. So on a cumulative basis, right, you still have the consumer discretionary and communication services. Again, it's the second spot now, not last. But let me show you this. This is where this is really perplexing for me. So look at communication services. It's now not even in the middle. It's now going all the way. It's down. It's equal to healthcare, which is fairly defensive, okay? So communication services look like it's starting to come up. But here's the other part. And this really is bothering me. Look at where consumer staples and real estate is now. It's at the bottom, and consumer discretionary is going higher, and so is technology on a monthly basis. Folks, consumer discretionary and tech stocks outperformed consumer staples and real estate over the last 30 days. That just doesn't make any sense to me. I don't understand, because if the market's going to go bear, I can assure you, consumer discretionary is going to underperform consumer staples. That's a fact. You're not going to have consumer staples and consumer discretionary battling out in an inflationary environment. So this is very perplexing. So on one hand, it looks like we're really starting to go up, because look at communication services. Consumer discretionary is above consumer staples. But on the other hand, we've got this technical trading action. So one hand, you've got the bond markets looking really good. The sectors are starting to look good. But on the downside, you've got this technical breakdown. So today's report is going to be very, very, very instrumental in letting us know whether or not yesterday's price action was, in fact, a shakeout ahead of the report, or it was anticipatory selling ahead of the report. Hopefully that makes sense. So you want to take a look, keep your eye on these levels, and if we break the low, I mean really break the low, and let's see if it's the same type of pattern. I'm assuming it's the same type of pattern on the SPY as well. Yeah, it's exactly the same thing. Let's see the Russell. Let's take a look on the Russell. Probably so. Yeah, just as bad. Although the Russell didn't break the low, which is kind of interesting. Oops, sorry. Yeah, I like the Russell. And that's the other thing. The Russell has been leading, and the Russell doesn't even look that weak right now. So again, there's a couple of things. A month ago, most things were bearish, okay? But right now, the bond market moving sideways, the Russell not really breaking down nearly as much. It didn't even break out yesterday. It didn't really take out the low from 4 days, this range, where on the on the broad market it did. The fact that consumer discretionary is now and technology are above consumer staples for the last 30 days, that's just, I don't get it. I mean, I'm supposed to get it, and I do get it, but what I mean is I don't get it because it's finally, it's moving away from really, really bearish to kind of uncertain, and I like that. But again, today's report is going to give us the big picture, and we have to respect what happens there. So let me now get a little bit broader and jump away into global economy, kind of give you a broad strokes, and then this covers a lot of what we just discussed. So this is a little bit of a reinforcement for you. So the latest report on U.S. consumer prices was due later in the day. It's due actually, well, this was written an hour ago. So yes, it's due in about 56 minutes. Economists expect it'll show inflation slowed a touch to 8.2% from 8.3%. That would be very, very, very instrumental in showing that investors are hoping signs that inflation has peaked. So if it's 8.2, 8.1, it'll give investors positive sentiment. If it's 8.4, forget about it. So Shanghai Composite Index added 1.4%. With price increase below the government's 3% target. Chinese leaders have more leeway to adjust policies to counter prolonged economic slowdown worsened by widespread restrictions imposed to counter outbreaks of COVID. That was a mouthful there. On Thursday, the S&P dropped 2.4% across Atlantic. Also declined when the European Central Bank said it would raise interest rates next month for the first time in more than a decade. This is positive. I'm hoping that Japan will follow suit too. Another hike is set for September, possibly double July's increase. And central banks will halt its bond buying program next month, which is huge. The risk is such moves can cause a recession if they're too aggressive. So really right now, we honestly, and I'm looking at sectors, and I'm pretty good at sector analysis, and it looks like things are looking better with sectors, but they look worse with the broad market, which could be because global economy is weakening, not just the U.S., and that could be putting pressure on everything, even consumer staples. So again, a big factor in inflation is higher gasoline prices, and folks, which have been putting a tighter squeeze on both companies, households, upping the pressure on budget. Crude oil prices are up 60% for the year. If Russian invasion ends, they will cool off quite a bit. Now, just to give you a little bit of a review, we took a profit. We took 3 profits this week. One trade lasted 9 days, and the other 2 lasted just 24 hours. They weren't day trades, but we got into BMY, healthcare stock, right here on the 9th. Right here, sorry, on the 7th. What am I saying? Right here on the 7th, and we got out right here on the 8th. Right here, this little window right here, made a nice juicy 22% plus in 24 hours. We did a BBV view for our pattern trader in our new program that we're launching next week. We also were in for a day. We made a nice little 13%, almost 14%. We got in on also 6-7 right here, and got out right there. Nice little juicy run. And last but not least, we couldn't not take advantage of Halliburton, which is actually down today. And we got into Halliburton on, let's see here, also 6-7 right here, and we got out right there. So the only trade that lasted a week was BMY. That lasted 9 days, excuse me. And on that trade, we got in 531 right here, and we got out right there. So a little bit of a stretch. But again, 20%, 22%, 13%, not too bad. Things are looking better. Right now, the biggest factor that I'm going to look at, and I'm going to tell you right now, is going to be that damn CPI report that's coming out. It's going to be the volatility index, which is going up. I'm not happy about that. And I want to see what happens to the semiconductors. I want to see if the semiconductors continue moving lower or not. Also, it would probably be very smart right now to keep your eyes on the consumer staple sector. The consumer staple sector right now is in a very strange position because it should really be going higher, but it's not. And I think we're going to have a global food crunch. Consumer staples are necessities, and they typically move higher when stocks go up. So I'm not so sure this is going to be sustainable to the downside. And I'm hoping that today's numbers are better than expected. Now, folks, I've got something for you, and I've got something really big for you, and it's happening tomorrow, and I can't wait till you be there. Record gas prices are record high. There's no sign of anything dropping. There's a renewed strategic warning that a recession may be in place. Matter of fact, I think the last 6 months we've been in a sort of a recessionary land, and we may be there for another 6 months. I think we're just done with leg one. We're going to be in this environment for quite some time. Not necessarily going lower in the market, but these gyrations, this volatility. And it's become clear that Washington has failed to financially protect the American public from what was and still to come. That's why I'm reaching out to you directly with an educational advantage. Let me be clear. I'm not promoting a specific strategy or a key indicator to help you win big. That's not what this is about. This is a simple way to get you ahead of what's going to happen ahead. I'm simply warning my students literally of the possible dangers ahead, and I'm showing you how to take advantage of it with complete mechanical and discretionary systems. It's 5 hours. It's 4 hours. I'm going to go live tomorrow for 4 hours. I'll take a 1 hour break in between. So it's 5 hours, but 4 hours of information. It's going to be the best education that you've had in a very, very long time. It's happening June 11th, tomorrow on a Saturday at 9 a.m. Eastern Time. You're going to have to watch this at least 4 or 5 times. It'll be recorded. You'll get the video recording. It's the best money that you would have spent in this type of market environment. I'm not kidding. This is a great, great way to get ahead of what's here and what's going to be here for at least another 3 to 6 months. I'm not kidding. And my timing is pretty good. Again, a lot of volatility, a lot of shenanigans, a lot of movement, a lot of gyrations. It's a good way to trade if you know what you're doing. And our win rate has been, on our closed trades since October, 78.23%. Our average gain has been almost 5% net every 21 days. We're almost beating the S&P 500 on an annual basis every 21 days in this market. My profit factor has been 1.33. That's a total of 147 trades with a 78.23% win rate. Out of 147 trades, we've won 115. These are closed trades. I want to show you how I've been doing it. I want to show you how you can get in on it. I want to show you how you can protect and potentially prosper in this market. Algo strategies, I'm going to teach you the torpedo. I'm going to teach you the Holy Grail strategy. I'm going to teach you the deep dive strategy. This is going to be a lot of fun. We're going to be hanging out tomorrow for 5 hours together. I cannot wait to be there. It's going to be a great time for all. Follow the link below. Check it out. Monday, weekly outlook, biggest threats, biggest opportunities. Post some comments, feedback, subscribe to this channel. Post me some love letters and send me emails at support@marketgeeks.com. I want to hear from you over the weekend. Bye, guys. Have a great day, and I'll see you tomorrow at 9 a.m. sharp. Don't be late. Even if you're late, it's okay. I know people on the West Coast are going to be sleeping in. That's okay. You're going to want to watch this recording several times. Bye, guys. I'll talk to you soon. Have a great, great day ahead.